In this video, you are going to learn about support and resistance, what it is, how to plot it, and tips to improve your support and resistance identification. This is part of a playlist of videos teaching you how to trade using price action. You can access the rest of the playlist at the Decisive Trading YouTube channel. If you find the content useful, please hit the like button. Subscribe to be kept up to date on future videos. Okay, we are going to get started by answering the question, what is support and resistance? If you already know this and want to skip to on-chart examples and tips, you can jump to 8 minutes and 20. Support and resistance is a relatively simple concept. Resistance is an area where we expect sellers to appear in a market. Support is an area where we expect buyers to appear in a market. Resistance is always above. Think about throwing a ball at a ceiling. It meets resistance and falls away. Support is always below. Think about walking. The floor is supporting your weight. What you very often find when trading is that a level of support or resistance from the past, if significant, is used again the next time the market reaches a similar price level. The reason is relatively simple. Markets are essentially just groupings of buyers and sellers. When looking to buy and sell, you are always looking for the best price. Let's say the market collapsed to 6,500 the last time it reached 7,000. We will also say that you bought into the market at around the 6,800 level as it started to press higher after the collapse. As it climbs toward 7,000, will you blindly hold onto your position? Or will you consider selling at least some of your position and taking profits? Well, for lots of people, they sell out and play it safe. This causes a similar price reaction. What about for buying? Buying is the exact same. If the market collapsed to 6,500 and then increased dramatically, buyers will watch this level in future. They missed out on a great buying opportunity. They don't want it to happen again. As this repeats on the market over and over again, support and resistance is created. Do you think that information is useful to you as a trader? Of course it is. Here we are on the Euro-USD chart on the daily time frame. Support and resistance can be found on any chart and on any time frame. Here we can see lots of areas of resistance, where the market sold off after reaching the levels. This is caused because there are more sellers than buyers. If we clear the chart, we can then look at the support areas. Now we are seeing more buyers than sellers, and the market is rising. It is important to note two things here. 1. We only pay attention to strong levels of support and resistance. Not everywhere there was any buying or selling. We want to see strong reactions the previous times the market reached the support and resistance levels. 2. Support and resistance is an area rather than an exact spot on the chart. If we jump back onto the Euro-USD chart and look at the resistance at the top, we can see that they are not all falling away from an exact level. We create an area of resistance around them. The same thing is done for support. We can see these two levels are reacting at the same area. It is an area of support. Why is support and resistance an area rather than an exact level? Well, think about it. A market is made up of lots of buyers and sellers. Although lots of people may think the level 7,000 is a good support area for buys, not everyone will buy exactly there. Some may buy at 7,005 to make sure they don't miss out if the market never falls all the way to 7,000. Some may buy at 6,995 so they feel they are getting a bargain. When they try to buy, the level 7,000 may not be available, and so they buy at 7,001, 7,006, 6,980, whatever it may be. They may also just read the chart differently to you. Whereas you see support at 7,000, they may see it at 6,980. All of this, and many other reasons, create an area rather than an exact level. Useful information for a trader, right? And there's something else that we very often see happening with support and resistance. Very often, when support is broken, it is used as resistance in future. And when resistance is broken, it is very often used as support in future. Here we see the market reacting from a resistance level. It then presses higher and breaks through. Now, if we extend the resistance area across the chart, we can see the market falling down into it and using it as support in future. And then, when we break back below, what happens? Now, the support level is being used as resistance. Let's quickly recap the key points. Support and resistance is an area, or zone, as I call them. Resistance is always above. Support is always below. Resistance, once broken, is often used as support in future. Support, once broken, is often used as resistance in future. Now, let's look at some tips to help you identify good support and resistance levels. We have already discussed how the market is made up of lots of people, and people tend to act in repetitive, predictable ways. For example, very often you will find support and resistance at round numbers. It is more common for someone to think, I'll buy at 7,100 or I'll sell at 7,100, rather than I'll buy or sell at 7,261. Although not exact, round numbers can give a good starting point, a sort of guideline of where to look for support and resistance areas. On a chart, you would look around the 7,100, 7,200, 7,300 areas. The level 7,000 would also be a great place to look. You also find that half whole numbers are also useful. 7,050, 7,150, 7,250, etc. You can also use forward testing, which is one of the best ways to practice and improve your support and resistance plotting. We will cover that when we move on to the charts. And finally, we will use triangles to help us spot levels. Although similar to using a line chart, I find that using triangles helps people improve and learn to plot key levels and read the market much faster. You will have noticed that when I have been drawing support and resistance and showing price movements, they have been creating triangle shapes. The sharp points of the triangles, when they line up with the sharp points of other triangles, are pointing you in the direction of support and resistance levels. Here we see our movements. We mark the points of the triangles. We then look to line them up where we can to create our support and resistance. Okay, let's move on to the charts and start putting some of this into practice. Okay, so now we are going to start putting this together on the charts. We're going to look at the FTSE 100, which is the market that I trade every day. We're going to do that on the daily time frame, and then we're going to move on to one of the most actively traded forex pairs, which is Euro USD, and we'll look on the 1 hour time frame for that market. So with the FTSE, what we're going to do first is look at this market in terms of how round numbers can help you identify potential trading areas. On Euro USD, we will go more into detail on how to forward test, and we'll then look at how that forward testing works out using historical support and resistance levels. So you can do this on any market, on any time frame. There is always support and resistance. So even if we just look at this chart to start off, if we sort of come down to the right hand side here, we can see the numbers. If we just come up toward 7,000, what do we see straight away? The most recent test on this market at 7,000, we've had a strong bearish movement. Now if we go up from there, we continue our way up towards 7,100. Where are we sitting at? 7,100. What do we find straight away? The market coming up and finding resistance at 7,100. Now if we extend it up, what you can also see is it's running up to around about 7,150. So the round number and the half round number. This happens over and over again on markets, across markets. If we come back even further, let's look at this level here. What are we sitting at? We're sitting at around about 7,250. Now, they are not exact levels. I would never just trade off of a round number or a half round number, but they are good ways to kind of focus you in on what you're looking at on the charts. And then if we start adding that in together with market movements, so all we're doing is we are drawing how the market is moving. Now, as I mentioned, you can do this on the line chart, but I have always found that doing it on the candlestick chart teaches you how to read the market, and the line charts can also hide quite a lot of what is going on. So if you just simply draw in the movements, you're looking for nice clean price movements to the low, all the way back up, then we find some good selling coming in. We then press up once again. We then find resistance and we fall all the way back down again. We then find support, back up we go. We come down, there's a little bit of a bounce here, which is worth drawing in. We then have a stronger move down. We break all the way back up. You can see the market pulling back. And then we have a stronger rally, really all the way up to here before we see any significant selling coming in. Now, if we just look at the triangles on the charts, and if we can line any of these up. So we've got two triangle points lining up here. If we extend it across, what do we see? So the test here, we then get another test. So that's the resistance working again. As we start to get this strong rally, what do we find next time we're here? We reject. Now, if we follow this up until we see further selling coming in, where are we seeing this selling coming in? It's testing back at the same points. So it's where the triangle points are lining up. Now, if we take this rectangle and extend it up to the highs here, you can see that the market comes down and tests it pretty nicely before we get the next bounce. Down below, we've got a point, and a point. If we extend it across, what are we doing? We're testing, we then break through, we come back up, we test it as resistance before we break through. If we take this point, and this point, we can line them up. Potentially the points of the triangles are giving you the support and resistance levels. Support, market comes up, breaks slightly above it here. It's not always perfect. Support and resistance doesn't work infinite. It doesn't go all the way into the future. Of course, the buying and selling is going to break these levels. But as part of a trading plan, the support and resistance levels are one of the most important things that you can learn and master as a trader. It's the most important thing. You break down, you test it as resistance, all the way up, you pull back, test the support, and you bounce. Over and over and over again on these markets. Now, just out of curiosity, looking at these levels, would there be any round numbers that can give us clues to look around this area? So what are we sitting at? 7,300, the round number. If we come down to this one, what are we sitting at? 7,200, the round number. If we come down to this level, what are we sitting at? So around about 7,080, but if we're starting to look around 7,100, the round number, it's giving us the clue as to the area we should be focusing in. Test, test, test. If we come back to this side and get rid of these lines, what we can see is this is actually a large testing area. So the bottom of the candle bodies, extend it across, it's meeting up with this level at 7,100. Over and over and over again, you're going to see this. Now we're going to move on to Euro USD. We're going to use forward testing, but we're going to do the exact same thing. And then we're going to act as if we're then moving into the future so you can see these reactions. So Euro USD. The first thing you can see on this market is what? A very key level of support. Test, 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 and test. Over and over and over again, support and resistance levels can be found on these markets. Now what we're going to do is forward test. All you're doing for forward testing is you are imagining that there is a section of the screen, so let's take this whole section here, that is in the future. So you can no longer see this section of the screen. Now what I'm going to do is put a line of support just above the rectangle, a line of resistance. So we know for this video that there's no point in us plotting levels up here because we're not going to see it. And so we know that we're not going to plot levels down here because we're not going to use them. So we're then going to scroll all the way to the left. We know our areas we want to stick in between. Let's get some levels back up toward the highs. Okay. So all we're going to do is we're going to draw in the significant levels. Now you can even sort of smooth it out even more. You can only look for the very significant bounces. So like this one, and like this one, like this one, and you can start to ignore the small bounces like this. And what this will do is when you're trading, you will have less trading zones. So you'll have potentially less trading opportunities, but it's allowing you to only focus on what you are identifying as the high probability areas. So we could say the market breaks all the way down here. It then bounces. We then break all the way down and we bounce. Now this is a fairly strong level. I want to include this. Now what's giving me the clue for this one? Look at this peak of the triangle right here. Move to the right, test again, selling coming in. We then break up, huge move down. We then break up again. We get another huge move down. We then break up, down, over and over again. We're seeing this. You could call this an area also. Comes down, it spikes up. Like this. Now what you're doing as you're trading live is you're just marking in these triangles as you're going. And you're identifying where they line up. And what it's also doing is as you do this more often, you're going to start to learn how the market moves. You're going to start to learn that very often these triangles come together and they create the support and resistance levels. And eventually you'll get to a point where you don't even need to draw this on the chart anymore because you already know what you're looking at. So I don't still do this. I don't still draw onto the chart. I just look and I can see there's a triangle there, there's a triangle there, there's two down there, there's one there, and then I line up the ones that are the most significant. All the way up. Okay, so if we just use those levels, let's go all the way back up to here. We'll get the rejection in, and then we'll get this last little peak up here. Okay, so very, very fast. I'm not thinking about it too much. I'm just looking for where I can see the triangles on the chart and I'm drawing it in. Now, what can we see from the points? Well, first of all, there's a significant one up here, but it's above our line, so we're going to ignore it. Down here, we've got one testing here, here, and here. So we're going to mark this in. Now this one needs to come up. Why? Because we want to line it up with this spike right here. And that is our first support and resistance area. If we come up a little bit further, 1, 2, 3, they're all on a very similar level. You could potentially create two areas here. So one like this. And then we'll wait and see if we have another one further on up at these levels. Okay, we don't. So we're going to ignore this one for now. We come down, we get a spike, lining up with a spike right here. Okay, not always absolutely perfect, but you can see this break down, we break back up again, it's creating a support and resistance area. Down below we've got one here, 1, 2, if we scroll to the right we can see the third test here. Let's mark this in. Okay, so it's slightly higher than the bottom point here. So we've got 1, 2 lining up with 3 here. And we're going to create a trading zone. Down below, we can see the spike, the spike, the spike, the spike. And when you've got these triangles on your chart, it makes it very, very easy to spot them and to line them up. Like this. Now this one could actually be raised slightly to include this. And we then have another potential support and resistance zone. Now we've got one here, 1, 2. And what can we see on this? We have a test. Market comes back down. It holds it as support, tries to bounce, fails. So now this is support breaking and being retested as resistance. As we break up, we hold it as resistance and then we break up. Okay, so relatively quick process. Now what we're going to do is we're going to scroll right and we're going to see if these zones would help us in the future. Okay, so first of all, we're not even into the rectangle yet. What can we see with this lower zone? Resistance, 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 and then we break up. What do we break up into? So we've got one here, and then we've got one here. We break up, test into our zone as resistance. We then break up, we test into the next zone of resistance, which is here, and then we sell off. Okay, so we're now back into our rectangle. I'll delete this so we can see it a little bit easier. And then we'll have a look. Our lower section, we test here. Huge bounce. 130 pips before you see any real significant selling coming back in. We come back down again. We test. We try to break. We hold this level. As we hold the level, what do we bounce up into? Our resistance zone. We sell off. We come down. We test our support. We break up. What do we break up into? Our resistance, where are all these sellers stepping in at this resistance level. We then sell all the way back down to what? Our support and resistance area. We then break up, further rejection, we break up, we hold at this zone, and then we break up stronger, and we see the market breaking through our zones. We break through this one. Where do we come up to before we see selling? Up into this level. We sell off. Where is it back down into? Support, support, support. And that's what gives the market the power to make a stronger bullish movement. You can see us reacting off of this one here before we break. Here, we're reacting. We're dropping back down into our zone. We're bouncing into our zone. We're falling away into what? Our zone, bounce, bounce, back up to this zone, resistance. Where are the buyers stepping in? Support. We fall down when we break. Where are we going down to? Again. Support, 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 support. Resistance, resistance, resistance. Over and over and over again. So that's how you forward test. It's, as I've mentioned, you can do this on any time frame you want, any market you want. All we're doing is we're using the visual representations on the chart to find where the buyers and where the sellers are most interested in a market. If you use forward testing, if you use the triangles, you will improve your support and resistance identification very quickly. You can do it across so many markets and so many time frames. You can literally be doing support and resistance every single day, practicing and then watching how the market reacts. That will build up your confidence. It will help you identify high probability trading areas, which will help you in your trading. Now, support and resistance isn't something I would recommend you use by itself. It's part of an overall trading plan. There's no sort of one component of trading that can be used by itself. You have to bring everything together into a trading plan. But support and resistance is the first thing that I do every day. It's the most important thing on my charts. I set it, I identify where I'm interested in trading, and then I start to implement my trading plan when the market reaches these zones. So relatively simple. It may seem difficult to you guys when you're watching this video, but all it is practice. When I came to the charts and looked at them the first time, it just looked like a mess. I didn't think it would be possible to pick out areas where the market would react over and over again, but you can see, really, it is relatively simple. I'm using the triangles. I'm looking to line up the points. I'm looking for lots of points which come together. I'm looking for the biggest movements on the market. A good sort of way to focus in is to use round numbers, but they should only be used as a guideline. Okay guys, that's everything for the support and resistance video. As always, I hope that was helpful. I'm James Orr, and thank you.